Hey, how's it going? This is Shannon DeCruz.
Alexandra Scott.
And I'm Adam Ewan.
And we're from Stream 2, Group 2, with us here today doing our market view presentation, part of the assignment under financial markets, BAFI 1002. And the currencies we've chosen today to do our comparison are firstly Australian dollar versus British pound. We decided to choose those two currencies due to what's currently happening in the EU and how Britain exited the EU and how it's going to affect the currency at the moment. And the second pair we're doing is Australian dollar versus United States dollar. This seems pretty relevant with all the things happening in the politics at the moment, the election. Yep. Okay. So currently, currently Australian dollar is averaging about 58 cents to one Great British Pound as of the 21st of September. This is a graph that we picked up from xe.com. You can see in 2012 where it's about 0.6 and how it is at the moment. This is showing all the fluctuations at the moment currently.
The inflation rate for both countries is relatively low compared to international standards today. Australia's inflation rate is higher than Great Britain's. Normally that would mean a decrease in demand for exports, but since many countries, including Great Britain, rely heavily on Australia's raw materials, a decrease in demand would not be substantial. Demand for British imports is expected to increase as the uncertainty of the British economy weakens their currency. Australia's interest rate is higher than Great Britain's. This should result in a larger amount of capital inflow of funds into the Australian economy. Overseas investors will be looking to invest increased capital into the Aussie dollar to take advantage of the higher expected level of returns. The purchasing power of the Aussie dollar is still relatively weak compared to that of the Great British Pound, despite the fluctuations resulting from the United Kingdom's withdrawal from the European Union. This may result in a high proportion of Australians looking to purchase goods and services within Australia's shores. The price of Australia's major exporting products have decreased. The decrease in commodity prices results in a decrease in the value of the Australian dollar, meaning there are less funds in the Australian economy. Australia are in a transitional period, relying less on the export of iron ore and are moving towards other sectors to generate revenue. Here's Shannon with the predictions.
Alrighty. Well, due to factors resulting from we expect the Aussie dollar to continue to appreciate against the British pounds to around 0.62, as the effects of the exiting EU are still felt in the major economies. Despite the decreasing commodity prices, the Brexit has had a far more substantial impact and will result in depreciating British pounds against all major currencies.
So one US dollar equals 75 Australian cents as of the 21st of September. And here's a graph showing the downwards fluctuations since 2012. The USA has a higher inflation rate than Australia at 1.1% compared to 1%. Some factors for this are the US election, which provides uncertainty in the market. The election can greatly affect the direction the market heads, and the potential influence it has over the market is substantial. A relative fall in the US dollar can be due to global factors, such as the International Monetary Fund outlining concerns of a growing risk of global economic derailment, which comes following a slowdown in the Chinese economy, and lower oil prices, all of which have caused a downwards pressure on the US dollar. The Australian cash rate is higher than the US, with 1.5% compared to 0.5%. This is also due to the federal election, as whatever the outcome may be, will result in short-term fluctuations due to uncertainty in the market and the potential of insulating America from its trading markets, and would have a major effect on exports. But we're forecasting the interest rates will stay the same in both countries. Commodity prices are low and volatile, but the US are more buyers and sellers of commodities, so this can be beneficial. And here's done it with the predictions.
Okay, well, due to the federal election, we are expected to see some fluctuations, and resulting in the US dollar to be depreciated against the Australian dollar. And here's our references. We use a lot of information from the master document from the Blackboard, Reserve Bank Australia website, xe.com.
Are you going to read that?
Federal Reserve Bank of America and Bank of England. And that's it.